Berlin and Brandenburg as a real estate investment region. German Real Estate Investment Series 08. Demand, infrastructure, microlocations, and long-term development potential. Berlin and Brandenburg form one interconnected metropolitan region, but their real estate markets are far from uniform. Berlin offers the economic strength, international profile, and density of a major European capital. The surrounding parts of Brandenburg provide additional land, commercial development areas, logistics locations, and expanding residential communities. For international investors, this combination can create attractive opportunities. However, success depends less on the general reputation of Berlin and more on selecting the right property, use concept, and microlocation. Berlin is more than Germany's political capital. Berlin is the seat of the German government, but its economic importance extends far beyond public administration. The city is an established location for technology, life sciences, healthcare, media, creative industries, mobility, and professional services. Its universities, research institutions, international workforce, and startup environment support demand for offices, laboratories, commercial space, and housing. Berlin's economy also continued to grow in 2025 despite the comparatively weak performance of the German economy as a whole. Official statistics recorded real economic growth of 1.1% in Berlin, compared with 0.2% for Germany. Official economic data for Berlin. This economic diversity does not protect every property from market risk. It does, however, give the region a broader demand base than locations dependent on a single industry or major employer. Population and international demand remain important. According to the official population calculation, Berlin exceeded 3.7 million residents at the end of 2025. This population increased moderately, primarily because more people moved to Berlin than left the city. Berlin is also highly international. People from 194 nationalities were living in the city at the end of 2025. Official Berlin population statistics. Population growth can support demand for housing, retail, healthcare facilities, and local services. Nevertheless, demographic development differs considerably between districts and neighborhoods. An increasing citywide population does not automatically guarantee higher rents or values for every individual property. The Berlin property market is entering a new phase. The sharp rise in interest rates and construction costs changed the German property market. Financing became more expensive, transactions declined, and buyers became more selective. This correction did not eliminate Berlin's structural demand. Instead, it created a market in which prices, financing, and property quality must be assessed more carefully. The 2025 IBB Housing Market Report described a challenging environment with continuing high housing demand and difficulties in new construction. Median asking rents stagnated in 2025 after 2 years of strong increases, while asking prices for condominiums showed moderate recovery. IBB Housing Market Report 2025. Investors should not interpret short-term stabilization as proof that the market has reached its definitive lowest point. A purchase should remain viable under conservative assumptions concerning interest rates, vacancies, renovation costs, and achievable rents. Berlin is a market of many microlocations. The expression Berlin property is too broad for a serious investment decision. A property in an established central office district has a different risk profile from a mixed-use building in an outer district. A logistics facility near the motorway must be assessed differently from a neighborhood retail property or a development site. Important microlocation factors include public transport and road connections, proximity to employment centers and universities, population and household development, the surrounding commercial structure, competing projects and available space, planning and construction law, local rent and vacancy levels, and the property's future suitability for alternative uses. Even within the same district, two properties located only a short distance apart may have very different investment prospects. Brandenburg should not be treated as one single market. Brandenburg surrounds Berlin, but the state contains very different economic and demographic areas. Municipalities close to Berlin can benefit from commuters, residential demand, business relocations, and infrastructure connections. Locations farther away may follow different economic and population trends. Official statistics illustrate this distinction. In 2024, the population of the area surrounding Berlin increased, while the more distant metropolitan area recorded an overall decline. Official Brandenburg population statistics. For an investor, the label Brandenburg therefore says very little by itself. Accessibility, municipal planning, employers, infrastructure, and local demand must be examined for the specific town and site. The airport region creates a separate investment corridor. Berlin-Brandenburg Airport is not only a transport facility. It forms part of a wider development corridor in the southeast of the capital region. The surrounding locations can be relevant for logistics, hotels, offices, light industrial property, data-related infrastructure, and airport-oriented services. In 2025, approximately 26.1 million passengers traveled through BER Airport. BER Airport Annual Report 2025. However, proximity to the airport alone does not guarantee investment success. Investors must examine road and rail access, noise restrictions, planning law, competing developments, utility capacity, and the actual demand from potential occupiers. A site marketed as being in the airport region may still be poorly connected in practice. Different property types require different location criteria. Berlin and Brandenburg offer opportunities across several real estate segments, but each segment follows its own logic. Office investments depend on public transport, building quality, energy performance, flexible floor plans, and the strength of the local employment market. Logistics and light industrial properties require motorway access, delivery capability, suitable land, sufficient electricity, and realistic distances to customers and labor. Residential investments depend on local household structures, affordability, schools, everyday services, and legal rent restrictions. Retail property must be assessed according to purchasing power, footfall, accessibility, competition, and the long-term viability of the tenant's business model. Development land requires particularly careful examination because its value depends heavily on planning law, infrastructure, and the realistic timetable for obtaining permission. Infrastructure can create value, but expectations must be realistic. New railway links, public transport improvements, roads, schools, and commercial developments can strengthen a location over time. However, investors should distinguish between infrastructure that is already operational, projects that have secured financing and approval, projects that are politically planned but not yet binding, and purely promotional expectations. A future transport connection may increase a site's potential, but delays of several years can fundamentally change the investment calculation. The purchase price should therefore reflect the location as it exists today. Future infrastructure should normally be treated as an additional opportunity rather than a guaranteed component of value. Existing buildings and development projects involve different risks. An existing property with stable tenants can provide immediate rental income. Its risks may include technical defects, expiring leases, inefficient energy performance, and future renovation requirements. A development project can offer greater value creation potential but introduces additional risks. Planning and building permission, construction costs and delays, financing during the development period, environmental and soil conditions, infrastructure contributions, letting or selling the completed space, and changes in demand before completion. International investors should avoid evaluating development land solely by comparing its price per square meter with completed properties. The legal and practical ability to develop the site is the decisive factor. The investment structure should match the regional strategy. The legal structure should reflect the number, location, and risk profile of the planned investments. A single property may be held through one German property company. A larger portfolio can justify a holding company with separate subsidiaries for different properties or development projects. For example, a Berlin office property, a Brandenburg logistics facility, and a development site near the airport may be placed in separate companies. This can improve risk separation, financing transparency, and the later sale of an individual investment. The structure should be established before the relevant acquisition whenever possible. Moving a property or company into a different structure later can create taxes, financing issues, and additional transaction costs. Conclusion: Berlin and Brandenburg offer international investors a combination of metropolitan demand, international business activity, infrastructure, and available development space. Berlin provides density, economic diversity, and global visibility. Brandenburg can offer additional land, specialized commercial locations, and access to the wider metropolitan growth corridor. But the region should never be assessed through a general slogan such as, "Berlin will always grow." Property type, microlocation, financing, planning law, energy condition, and local demand remain decisive. The strongest investment is not necessarily the property closest to central Berlin. It is the property whose location, use concept, legal structure, and financial assumptions continue to work under realistic long-term conditions. This article provides general information only and does not constitute legal, tax, financial, or investment advice. Every property and location should be reviewed individually before an acquisition decision is made.